In a recent turn of events on the global stock market stage, Apple finds itself facing a formidable challenge from Microsoft in the race to claim the title of the world's most valuable company. The precipitous decline in Apple's stock, attributed to apprehensions about iPhone sales, has created a vulnerability for the Silicon Valley giant, allowing Microsoft to emerge as a serious contender. As of the latest market data, Apple's shares have experienced a 4% dip in the early days of 2024, marking a stark contrast to its impressive 48% surge in the previous year. Meanwhile, Microsoft has sustained a steady upward trajectory, with a 2% increase in 2024 following an outstanding 57% surge in 2023. The stock market dynamics have played out in a way that has seen Apple's market capitalization diminish to $2.866 trillion, just slightly ahead of Microsoft's valuation at $2.837 trillion. Notably, Apple's pinnacle market capitalization reached an impressive $3.081 trillion on December 14, 2023, while Microsoft touched its zenith at $2.844 trillion on November 28. The catalyst for Apple's stock descent can be traced to concerns regarding smartphone demand, particularly evident in a reported 30% drop in iPhone sales in China during the initial week of 2024. Analysts point to mounting competitive pressures from local contenders like Huawei as contributing factors. Despite the impending launch of Apple's Vision Pro mixed reality headset on February 2, a product heralded as the company's most significant since the introduction of the iPhone in 2007, analysts remain cautious about its immediate impact on earnings per share in 2024. Apple's recent sales forecast for the holiday quarter fell short of Wall Street expectations, underscoring the challenges the company is navigating. Microsoft, having briefly surpassed Apple in previous instances since 2018, particularly in 2021 amid concerns related to supply chain disruptions caused by the COVID-19 pandemic, is once again knocking on the door of being the most valuable company. Valuation metrics reveal that both tech giants are currently trading at relatively high price-to-earnings (PE) ratios. Apple's forward PE of 28 exceeds its 10-year average of 19, while Microsoft is trading at approximately 31 times forward earnings, surpassing its 10-year average of 24. Analysts are closely monitoring the financial outlook for both companies. Projections for Apple suggest a marginal 0.7% increase in revenue to $117.9 billion for the December quarter, marking the company's first year-on-year revenue uptick in 4 quarters. In contrast, Microsoft is expected to report a robust 16% increase in revenue to $61.1 billion, buoyed by sustained growth in its cloud business. The coming weeks will undoubtedly be crucial as investors watch the unfolding narrative between these tech giants, eagerly anticipating which will secure the coveted title of the world's most valuable company.